Hi guys, this is Mimi Forex here again, and I'm here to show you a step-by-step approach on how I placed this trade, how I got the trade, all the way from daily time frame, how I created the story behind it, and how I entered the trade, where I exit the trade, what I looked out for, and also at the end of the video I'll be answering some questions like what other block will I choose, what should I look out for, because it can be frustrating after watching different tutorials online, reading a lot of PDF. When you go live in the market, you really don't know what to do, right? So in this video, just stick with me. In this video, I'm going to show you a guideline on how to trade the financial market, on the exact steps I took to place this trade, and hopefully on your own end, if you watch this video to the end, I'll make sure I give you the detailed step by step approach so that you can replicate it on your own end, right? So without wasting much of your time, this is Euro USD on 2 hour time frame, and this is how the trade looked like before I placed the trade. You can see it's everything is still the same, and this is the trade afterward, right? And I also documented the trade and I posted it on my Instagram handle. My Instagram handle is at miracle anayo 1. I'm going to drop the handle at the description box, so you can do where to check me out when you're less busy. And without wasting much of your time, let's dive straight into the video. If you are a returning subscriber, before I forget, I want to say big shout out to you. I want to say thank you so much for coming back. If you are new to this channel, watch this video to an end. If you find anything helpful, do it to give it a like, thumbs, comment below, because I will definitely reply to your comments. And yeah, without wasting much of your time, I hope you are doing well. Let's dive straight into the video. So guys, welcome back to the chat, right? Welcome back to the chat. All I just want you to do is to relax and watch me break down the market. So I started off on the daily time frame, and of course I will expect you to ask me why. Now, the reason I started off in the daily time frame is just to create a story behind the trade. Now, this is the reason why you hear most traders or most profitable traders telling you trade the financial market, trade just one. The reason they are telling you that is because if you should trade one financial market, you are going to connect with that trade. Do you understand? You are going to connect with that trade. You are going to know what the market is set to do. You are going to know how that market behave. You are going to know where it's meant to go per time and per season, right? This is only when you connect to a trade. And now I am trading Euro USD, and I choose to start from the daily time frame. Why? To create a story behind it, to know where the market is heading to know what the market is doing, right? So with this, you can now dive straight. It will be a lot easier to now understand the market structure, because your profitability in this forex or financial market is directly proportional to how you understand market structure. But don't be frightened about market structure. I'm going to break down this chart, the way I place the trade, the step-by-step approach, so that you on your own end can replicate it and get the exact same result or even more, right? The only thing you need to do is to relax and watch this video, and also try to implement it on your own end. So without wasting much of your time, I started off from the daily time frame, and what did I look out for? I look out if the market is in an uptrend or in a downtrend. Remember, the first thing, if the market is bullish or bearish. So the market must be either bullish or bearish. If I can't really understand if the market is bullish or bearish, I'll just let the market be. That means what that is trying to say is that the market is in a ranging state, right? So you just let it be. So the market has to be bullish or bearish. In other words, the market has to be trending, right? So now, if you understand market structure, the basics, you understand that this market is basically in an uptrend. But there is something unique about this trade. Let's break it down. Also, if you understand basics of market structure, you understand that the difference between this high and this high is this low. And anytime the market breaks below the low, we call it a change of character. But this is not a change of character yet. I'm going to give you two reasons why this is not a change of character. The first reason is that if for a market to give us a change of character, or rather to identify a trend fast to identify a trend more faster rather to identify a trend more faster, the market gives you, if, for instance, the market is in an uptrend like Euro USD, what you are going to notice is the market will give you an impulse candle to the upside. then correction downward, another impulse to the upside, correction downward. What do I mean? You can see this is an impulse, this is a correction candles, this is an impulse, this is a correction candle, this is an impulse. Now you can see that this is still a correction candle. So with this alone, I'll be more careful to conclude that this is a change of market structure yet. Now the second reason, which is more profound or which is more detailed, is that when the market gives you a break of continuation of trend or a break of market structure, a change of character, whichever one you encounter at that particular time, one thing you have to do is to locate the other block that results to the break or continuation of the trend. Now if you locate the other block, you then have to check if the pullback actually mitigated that other block, because it's until the market mitigate that other block then that whole transaction is complete, right? So now if you take note of this, this is the other block, because after this little candle right here, this candle that serves like a hammer, we have the impulse. Now if you should take note, you will understand that this market really did not mitigate the other block. Don't worry, let's get a horizontal tool for more clarity. Now this is it right here. You understand that the pullback actually did not mitigate it, no matter how small it may be. What it means is that liquidity lies liquidity lies from the low of this candle to the mitigation of this other block. What it means is that the market will definitely come back to take out that liquidity. So I'm going to use my horizontal tool to mark out the other block, and you will see how the market actually mitigated it. Now this is the horizontal tool, and I'll put it at the other block right there to cover the hammer candle. Now if you carefully notice, you will notice that the market, after the market took out the liquidity line at the in between the low of this candle and mitigation of this other block, the market gave us a change of market structure, right? The market gave us a change of market structure, now identifying that okay, the market is still in an uptrend. So the next target for this market is to take out this high, right? So the next target is to take out this high. So for now on, the market is in an uptrend. So this is the story about daily time frame. Now I have concluded that the market is in an uptrend. Only with this now, I will now say it, I will now write it on my journal, daily time frame uptrend, right? So I've created a story about that. I will now, let's delete the arrow so make our chart clean. Only because I have now find out the story behind the daily time frame will I now jump down to the lower time frame. Without finding the story or finding out what the market is doing in the higher time frame, I have no right to jump down to the lower time frame, because if I do, I will be trading on assumption, and I will be trading on frustration. Like it's going to be very difficult to understand where the market is going to, because if you jump down to lower time frame like that, you are going to find diverse order block, you are going to find bullish order block, and also you are going to find bearish order block. So which one are you really going to trade? So this is the problem most new traders face. But for you to navigate through this confusion, you have to understand market structure, you have to connect with the trade and know where the market is heading to. So like I said, I have written in the back of my mind that daily time frame is in an uptrend, which is the overall trend. I will now jump down to the 4-hour time frame. Now jumping down to the 4-hour time frame, we also do the same process over again. I mark out this is a break of market structure to the downside. We have another break of market structure to the downside. Then I have a change of market structure to the upside. Then I have to now locate the other block that was responsible for the break of market structure to the downside first. Now this is the other block, this weak candle, because see, you can notice that after the weak candle we have a strong impulse to the downside. So this is the other block that is responsible for this break of market structure to the downside that mitigated our other block. So now the market went into that zone, and what do you notice? It gave us a reaction before breakout. Now what we are going to do is now to find out the other block that was responsible for the breakout, because prior to now the market was in a downtrend. Now the market has changed direction, so there is a lot of order that results for the market to change direction, so we have to look for it. Okay, just to zoom more so you can see what I'm saying. Now if you notice, this is the other block that was responsible for the change of market structure. You can notice after this, will I call it indecision candle or inverted hammer, the market gave us a strong impulse to the down to the upside. So within this place was this is within this zone was where the order was placed that result to the break to the upside, right? In other ways, we call it the supply to demand flip. What does that mean? It was meant to be a supply to the downside, but now that zone is now a demand, so it's a supply to demand flip. So placing my horizontal tool at that zone will mark it. So we repeat the same process. Did the pullback actually mitigate the other block? No, it didn't mitigate the other block. That means there is liquidity line the depth of this candle to the mitigation of this other block. So the market will definitely have to come back to take out the liquidity. So that is the other block I'm looking at. I will just extend it to the future. Also, the market gave us a break of market structure to the upside without returning to mitigate the other block. So this is where the market structure gets more confusing, right? So now the next thing you have to now pay attention, because I said earlier on, it's forced to trade the financial market, forex in particular, on assumption. We now have to really predict where this market is going to stop before the pullback, and that is where I got the trade I showed you earlier on. So now going back to the bearish time, I noticed that there was an imbalance right here that the market did not mitigate. So above, from this point all the way to this point, is an order block that results in this imbalance. So using my horizontal ray, I'll put it at that zone right here. I'll put it here. Then I'll take the next one, I'll put it all the way above, because all the way the whole of that zone is now my order block that resulted to the continuation of the trend to the downside, right? So we are now going to return to the present. Now immediately the market tap into the zone, what I will do is to jump down to the lower time frame. Firstly, remember we are in 4 hour time frame. And now why will I jump down to the lower time frame? I will jump down to the lower time frame because the market has mitigated the illiquidity. What I mean by liquidity, has mitigated the fair value gap left here, mitigated the other block that this candle didn't mitigate. So there is definitely going to be a reaction. And to add to that, the market has internal liquidity to take out. So the market has this liquidity and the mitigation of the order block that resulted to the origin of this bullish move to take out. So the market has high probability to come back down to mitigate this order block. So I'll be looking to sell this market downward, but I will not just sell the market from here. I need a confirmation. So this is the reason, after the market tap into that zone, I first of all jump down to the 1 hour time frame. I won't just jump down straight to the 5 minutes, 15 minutes or thereabout. Then jumping down to the 1 hour time frame, I noticed there was a liquidity grab. You can see the impulse that took out this high. That's interesting. I will now have to jump down to 20 minutes to see things more carefully and precise. What really happened at that zone? Okay, yeah, this is it. So the market tapped into that zone, and really what we are looking for is a change of market structure. So after that, after the market tapped into that zone and gave us a liquidity grab, this is the liquidity grab that took out this high. The market then gave me a change of market structure to the downside. Now in a case like this, it may be difficult to find the other block to trade from. You may choose this, right? And you will notice a bit, you notice that actually the market didn't mitigate it. But to be on a safer side, what I usually do is I use the Fibonacci retracement at the extreme level, which is 0.768. That is the zone I am looking. Anything below, above the 0.768 to the origin of the market is a good place to sell the market if it's in a bearish market. Now what do I mean? Let's go to the 1 hour time frame so we can conserve it, or we can see things more carefully. Now we really don't know where the other block is because there is no precise zone, but we know that there is a particular zone that results to that change of market structure. So in that case, we use the other block to find it. Now I did not take any trade there because I don't know where I'm trading from. So I just have to notice, just have to mark out the zone. You can see that at this X zone, the X zone, now the number behind this X zone is 0.768, right? So immediately the market tapped into that place, I noticed the market gave me a continuation of the trend to the downside. So going ahead to delete the Fibonacci retracement, because I think, okay, before that, let's go ahead to use our horizontal tool to mark out the whole of that zone as our order block. So we can delete the Fibonacci retracement now. So before that, you notice that the market actually gave us trendline liquidity right here. This is a trendline liquidity, after which the market aggressively went up, mitigated the order block, because now you notice that this low did not mitigate the order block. This low right here, because this is the change of market, or change, continuation of market structure to the downside. The high did not mitigate the order block, so giving us a trend line liquidity. Like I always say, there is liquidity line above. So the market went above to mitigate the order block and still gave us a continuation of the trend to the downside. So this is where I'm now interested, because we now have a bearish order flow, right? So using this to mark out the continuation of trend. Now what we do is that we locate the order block that resulted to the break of market structure to the downside. Now this is the order block right there. You can see the order block. Now you notice that the pullback did not actually mitigate the order block, leaving liquidity, a tons of liquidity above. You can see the liquidity of imbalance, liquidity above. So meaning the market will definitely come back somehow to take out this liquidity. So going back in time, we have to now identify the order block. So this is the order block. So that was the order block that gave us, so this is the order block that gave us the break of market structure to the downside. Then extending it to the future, what did you notice? The market came back, took out the liquidity lying above the high, mitigated the order block, and swept to the downside. Now before the market mitigate our order block, what do you notice? If you understand the concept of liquidity, you know that the market gave us equal lows right here. So this is where I placed my trade. I placed the sell at this point. I placed the sell here and my stop loss above the high, a little bit above the rectangle, and I target the liquidity line below here, which is a 1 to 10 RR. So that's it, guys. That was the step-by-step approach on which I took that enabled me to place this trade, and it ran for 1 to 10 RR and hit the tip. I actually closed it at the equal lows like I showed you. Again, this was how the chart looks like before I placed it. When I placed the trade immediately, this was the trade, how the trade ran, and this was the documentation of the trade, and also this was what I got on the trade. You can see right here, Euro USD 0.30, 0.30, and if you can see it carefully right here, you can see 0.30, right? So yeah, that's it about it. Make sure you watch the video again if you are struggling with market structure. Implement every step and every guidance I gave in this video, and I promise you are going to be well okay and well grounded. If you are new to this channel, do it to like and subscribe, turn on your bell notification. Also, I'll be dropping a step-by-step guide on USD card on how I got the trade, and also I'll be dropping a step-by-step guide on AUD USD. Though I missed out on that trade, I was no opportunity to enter. It was not up to 2 pips, right? So I'm going to still drop what I saw and what made me to place the trade, right? So like I said, just a real recap. Make sure you pay attention and spend time to understand market structure. And how do you sorry about that. And how do you understand market structure? You understand market structure by connecting to the trade via higher time frame and build a story behind every time frame. I also have a signal group. If you're interested to join my signal group for a minimum fee of $25, just $25, and you are into the signal group where we make money together. And I'll also be dropping a step-by-step approach on why I'll be placing each trade there in the signal group. Do well to reach out to me. My handle or my contact detail will be in the description box. Please, the description box, not the comment section, to avoid being scammed. And that being said, see you on the next one. I love you guys. I love you. Trade carefully, trade with patience, is a gradual process. See you on the next one. Peace.